Today I'm going to be talking about the business use of home deduction. So notice I didn't say home office deduction, I said business use of home deduction. And the reason why is because it's not just a home office deduction, but it actually is a business use of home deduction, which can include your home office and the space that you use to store inventory. While you have to use a home office regularly and exclusively for an office, and you can't use it for anything else. So you can't have it as a den where you also watch TV, but it has to be used specifically and only for an office on a regular basis. That doesn't apply to inventory storage. The IRS says if you're storing inventory or samples regularly, that space doesn't have to be used exclusively, but just regularly. So that means if you have a garage or you have a basement or you have a room that you're using to store inventory, you can use it to store inventory or samples, and you can also use it for other things, and you can deduct the square footage of the space where you store the inventory. So how do you claim this on your tax return? Well, if you're a single member LLC or a sole proprietor, there's a space on your Schedule C to claim this deduction, and you have two options. One is the simplified method, where you're just able to take a deduction per square foot that's fixed and it's capped at $1,500, or you can use the actual expenses method, uses the square footage as a percentage of the total square footage and looks at your actual expenses like your utilities, your rent, your home insurance or renter's insurance, and all the actual expenses that you are using, and then you can take that deduction as a percentage of the total. I personally recommend the actual expenses method and use that with most clients unless there's a reason to use the simplified method. And the reason why is because the simplified method is capped at a certain amount, so you might get a bigger tax deduction with the actual expenses method. Also, you can't use the business use of home deduction if you don't have a net profit. So let's say you had a net loss for the year, you can't increase that net loss with a business use of home deduction. And if you elected the simplified method, then for that year it's lost. But what you can do is use the actual expenses method, and if you have a loss in the current year, that loss will carry forward to offset business income in future years. So in most cases, I'd say it's more beneficial to do the actual expenses method. So now that we've talked about both methods and some of the pros and cons of each, let's look at the actual tax forms that you'll need to fill out in order to claim these deductions. So the first one is Schedule C, and Schedule C is the profit and loss from business from a sole proprietorship or a single member LLC. On this form, you'll see line 30. Line 30 is the expenses for business use of home, and that's where you're going to make this deduction, and it's going to be deducted from your tentative profit of the business. And whether you use the simplified method or the actual expenses method, the deduction is going to go there. The difference is that if you're using the simplified method, you only have to enter the square footage of business use and the square footage of home to get the simplified method, which is simply going to be $5 per square foot up to a maximum of 300 square feet. So you can see how the deduction is limited. If you want to get the maximum deduction, in most cases, you would do the Form 8829, which is the expenses for business use of home. And there you'd calculate the percentage of business use based on the percent of the home that you're using for business on the square footage and the total square footage of the home. So you need to measure those things in order to figure that out. But you can see on this form there's actual expenses such as insurance, rent, utilities. And remember, if you don't use the expense because you had a loss, you get to carry it forward. But another thing that's really important about the actual expenses method is you get another deduction, which is a non-cash deduction called depreciation. Depreciation is just a recovery of the cost of the home and what you paid for it. And so commercial property, because yours is business use, that percentage of your home is depreciated over 39 years. And that's something that you're probably going to need an accountant to calculate because it can be complex and it's based on the acquisition cost of your home and the proportion of the taxable land to the taxable building because only the building can be depreciated, and then you have to calculate the percent that will be depreciated. One thing to note though is that later on, if you sell the house, the business use portion can be subject to depreciation recapture, which is a tax on the percent that you deducted of depreciation over the years at 25%. So something to be aware of, but many people choose to claim this deduction anyway because it provides tax benefits now, some of which are recaptured later. If we look at the IRS website here, you'll see the simplified option is listed here, and it compares it with the regular method. And without going into the details here, you can look at this page yourself. I generally take the business use of home deduction under the actual expenses method for all of my clients because it tends to be more beneficial, particularly when you have a loss in the first year. So I talked about how to claim this deduction if you're a single member LLC or a sole proprietorship. But if you are not either of those, let's say you're a multi-member LLC or you're an S Corp, there is no business use of home deduction on those separate business tax return forms. So the way you claim the deduction is to get reimbursed for your expenses from the corporation or the LLC using an accountable plan. And I won't discuss what an accountable plan is, but just understand that if you're not operating as a single member LLC or a sole proprietorship, claiming this deduction is different, but it's still possible. Well, hopefully you found that helpful. If you like this video, go ahead and like and subscribe because I'll be producing new helpful video content every week. And if you need help with your taxes and you want to work directly with us, go to the link in the description or go to sellercpa.com and click book a call to book a call and start working with us today.